Hello guys, glad to have you on board again. Today we're Tuesday, so we're taking care of intraday scenarios just about the SPX. We'll do just a quick intro about cryptocurrencies, so the crypto maniacs will have their daily update. So yes, we've got something to talk about. Yesterday's session is a bearish engulfing and not a tiny one. We closed at the lows, broke out of the previous support, broke out of the support trend channel and stuff like that. So the 1 hour chart breakout is now activated. My reinforcements have been executed as well. My stop losses have been narrowed. So I'm going to talk about that, why this has been done. But normally it shouldn't be a big of a surprise because it was what I expected and what I told you to do. Sorry, I'm not telling you anything to do. I'm not here to give you any trading advice. I'm just telling you what I do and why I do stuff. So like I said, I highlighted the very high probability to break this down, to create some bearish breakdown in the 1 hour context as we rejected without reaching out to context, which suggested that we built a range and that this range will very likely break to the downside. So we've got the confirmation now, we've got an additional signal saying yes. Also, the indicators are showing some bearishness potential throughout the range structure. So what it says is that we're still ranging. So if you think it's too late, that you cannot even trade Bitcoin bearish anymore, that you have to jump in board right now, then those type of signals should tell you right the opposite. So what this says is that we're still in a range, so don't be too fucking aggressive. It's not about time to do so. It's just wait, there might be another final pullback within the range, but normally you want to favor selling, which means any pullback that can be done further in time is something you want to sell. That doesn't mean it will happen. All it says is that when you have this, still says normally we're still in a range. So no hurry. Don't be too aggressive. Wait for reliable prices in order to put some trades in the market. But still, if you already have trades in the market, like you should have, if you're just unlike me, normally at that stage, what it says is that you can fucking risk manage. You can lower your stop losses and increase your position sizing. Not tripling them, but just doubling it. That's what I said. I had 0.25 Bitcoins. Now I do have 0.5 to the downside. I'm just increasing my risk without taking too much risk. I move on as the market gives me positive information. That's all I do. I'm walking forward when I see good news. I'm walking backward when I see bad news. So I see very few bad news at the moment. Absolutely no bullish signals coming from the momentum. Bearish signals coming from sine wave. Momentum remains bearish. So there's nothing to really be worried about at the moment as a bear. So I'm just increasing my risk point, period. That's all I'm doing. I'm not getting crazy fucking leveraged because we're still in a bubble trading, and for some reasons this could reverse and prove me wrong just like that. It doesn't look like that because normally having bearish breakouts in a 1 hour chart context, when we had a 4 hour bubble or excessive trading, generally doesn't fit the plan because those structures act like Ponzi schemes, and when they tend to fail, which means when the momentum is dampening, this is where those structure generally triggers the speculative collapse. We'll talk about that more in detail, obviously, just by tomorrow, because you guys in Discord have been picking the topic for tomorrow's session. Just for transparency purposes, this is the French version, but it's pretty much the same order, A, B, C, and D. And even the French guys have been largely voted for the answer number C, which is technicals, basic notions about volume. This is exactly the same, pretty much the same kind of answers for you guys in English. So yes, we're going to talk about basics and volumes in trading, and obviously we're going to talk about volume and the volume importance into crashing and bubbly structures. how the volume is essential to confirm that you are in such structure, because that will make the difference between a bubble and a market that is pricing in some impacting news. So emotional markets generally will be driven by a reason, which means a catalyst or something that really is and needs to be pushing price in a direction, either bullish or bearish. But there are just speculative bubble in which nothing really reliable is happening, or this thing is pretty much overpriced. It's exactly when we do have speculative bubbles, which means volume doesn't follow prices. And anyway, so this is for tomorrow, so I'm not gonna spoil anything. So see you tomorrow to talk about that, volumes in bubbles, and obviously we're gonna talk about the volume profile, which means lots of you guys are gathering interest in this stuff. So many of you think this is the thing to understand the market. Once again, big mistake. It is just an additional technical information that can be reliably used in specific kinds of contexts like ranges and stuff like that. So I'm going to do kind of a recap of what's useful with volume, what's bullshit with volume, and how to use it properly in a speculative trading strategy. So anyway, regarding Bitcoin, so what we have is not good, all I can tell, and just to sum up this information before we actually move to today's content, which is intraday trading on the SPX. So a trade is validated on Bitcoin, simple as that. Lower the stop loss. You can now put your stop loss in here. Normally they should be safe regarding the fact that we already broke to the downside. So we could have some pullbacks, and if we do have, then you must be aware that selling in this area is low risk. That doesn't mean it will work out 100% chances, but still, this is where you want a low risk trade. If we do have a pullback to this trend line, you definitely want to sell it. But still, with a stop loss and validation, speculative leverage, and usual stuff. All right, I've done all my reinforcements, which means at that stage I'm doing nothing but waiting for the targets. All right, so I'm waiting for additional information. If we do have a pullback, I'm not going to trade the pullback. What I'm going to be trading is the next breakout. So if we pull back, I'll put an additional trade when we'll break down this support, but that's it. And that's the last one I'll do. This is the target area. So anytime we get to reach out close to 6,700 to 800, anytime we reach out to this area and we break down the support is where you want to start locking on your gains. All right, so look out for bullish signals in this area, because this is where you're going to get the fuck out. But that's the plan normally. You shouldn't be surprised by that. So actual stuff. We get to the SPX. First of all, we do what we do when we do intraday trades. We have a look at the calendar. That's absolutely necessary. So 11 a.m. on my local time scale, obviously. We've got an employment rate and a few stuff from the euro area. And at 4 p.m., so 4 p.m. is 11 a.m. in the U.S. time scale, in the U.S. time zone. We've got durable goods and factory orders, so not that big of a deal, but still some stats coming out of the U.S. economy. So we do next, so we take care of those two timings. Just make sure that if you do take 3-minute trades or something like that, just make sure you don't take them right before the catalyst shows up, because it can entirely fuck up your signal. So if it shows up that you have a signal right before the catalyst release, then what you do is that you divide the leverage by 2 and you double the stop loss, just to make sure that if the catalyst is just fucking up your signal, then you still have 50% available, either to reinforce later or just let it go and have a larger stop loss to absorb the underlying volatility. So anyway, next step is you have a look at the daily chart on the caching structure. When you do take care of trading intraday stock markets, you need to have a look at the cache structures just to make sure there are no big gaps right close to the actual traded prices, because they act like magnets and they have technical importance. Someday we'll make another case and a technical show about gaps, obviously, because this is an important topic that we need to dig a little deeper into, but we'll do this further in time. All right, but anyway, so in here we do have gaps. We have a first open gap in here with a big with a gap, all right, which means the previous session's lows are way higher than the next session's highs, which means there's an open gap in here on the cache structure. We've got another one in here, same thing, all right, big gap, open gap. We tried to fill it 2 days in a row, failed, and then had the bearish reversal, which means these are generally what we call acceleration gaps, all right. So this one is a rupture. What the fuck? How do you say? It's oh my goodness, I need to work on my English. So, all right. So anyway, we'll do about gaps, but this one is the it's not breakout gap. How the fuck do we say this? Man. All right. Well, what it means is that this gap is terminating the previous move. It means the bears are taking control. This is, as long as this one remains, we do have bearish control. As you can see, this one is not an open gap, so this one doesn't require to be filled. It's just a sentiment gap. It prints the sentiment that the bears are in control. As long as this gap is not traded again, the bears can stay in there. This is the reason why I told you, I think those trades I got right on the top in here, they're safe, because those trades I can just put them at break even and not even caring about them anymore, because I take them into monthly chart scenario, because if I'm wrong, we're gonna get to fill this gap and stop me out of this game. But still, as long as we remain below this price, I'm safe, and I'm going to keep those trades as long as necessary, even if that means taking them for 1.5 years or 2 years. I'll take them for the market to crash, if it ever crashes. And if it doesn't, I'm going to be out with no loss. Anyway, so that's for swing trades. We shouldn't even be talking about that. So we've got gaps, and the nearest gaps today is this one to be filled at 27.77, and the actual market close at the time was 27.86. So we just take care of this, all right, of this price for a psychological importance and technical importance in the intraday. All right, so 27.77 or 27.80. Oh my goodness, 88. All right, so 27.77, 27.88 on cashing prices. All right, so what do we do next is we go 1 hour. Oh my god, I'm gonna make it. No, I don't. So next step, so 3 steps. Economic calendar, absolutely necessary, making sure that you have no big catalyst to fuck up the day. Second stage is you have a look at the daily cash structure to make sure there's no big open gap close to the actual traded prices right now, because they can have a technical importance. Like we said, we do have one out of 27.77. I hate this number. And 27.88. All right, so this is where we've got some gapping structure attraction. And then you have a look at the intraday 1 hour chart time frame, all right, this one on the futures market, and you contextualize this market. So kind of the big major context, making sure that you have no trends, because if you're trending on this market, then you're gonna have to just one-side trading. You don't trade counter trend, or you avoid counter trend in the intraday session when you've got a trend in the 1 hour, which is not the case in here. Does it look like a trending market? No, it looks like a bearish ranging market more than anything else. So what we have is a strong resistance in here, because that's the previous support that we broke. All right, but as you can see, the market is every time is deeply retracing. You see a breakout in here, we do have. So we must be aware that we might be facing a potential trend. It really fits the breakout. We've got the accumulation and stuff like that. All right, so I think we might have a breakout. Reason why, if you buy, you need to be really cautious, because it can go wrong pretty rapidly, because if there's a bearish trend, it can reactivate anytime. All right, anytime we get to trade back into the trend channel in here, could reactivate, and that's what we're doing. So it could be just in here in 2 or 3 hours, that would be just absolutely normal, and that would just said we're bearish trending. And if that's the case, and if you bought, then you need to be buying with low leverage. So first thing first, we have this information. We might be bearish trending, and if we do so, and if you decide to buy, you need to do it with a lower leverage than the selling entries you would take. Okay? The selling area, to me, if we're about to build a bottom in here, because as you can see, we do have early ranging signals in here, that doesn't really fit the plan of this trend. So what we might say in here is that if there is a trend, there is also a risk that we might just be ranging in this area. All right, so we can still buy and sell. We just make sure that we buy low leverage just in case we might be trading against the trend. So then what we do next is we highlight the technical areas, so the 1 hour chart context. So as we've seen, we might be either bearish ranging or bearish trending, which means buying is obviously below the 1 hour context. So if we're about to buy today, we're going to do it below 27.24 in a 1 hour chart context, which means you always follow the big guy, the bigger time frame. So in this 1 hour chart context area, support area, we're going to take 15-minute chart trades. All right, so in this area, you want to look out for a 15-minute chart signal. Aggressive traders, obviously. Low-risk trader will just wait for a 1 hour signal. So these are the areas. All right, this is the resistant context. Anytime we get into the resistant context is where you want to sell. All right, so anytime we get in here into the Fibonacci's is where you want to start selling and look out for selling entries. Right, in the 1 hour chart resistant context. These are the areas in which you search for 15-minute trades. All right. And then for those who want to have even more aggressive trades and want to take even more trades in the intraday basis, you're going to follow this exact same guide but on the lower time frame, which means instead of figuring out big 1 hour chart time scale areas, you're going to do this on 15 minutes. So what is this? 15-minute, definitely a trend. All right, and here, if that is not a trend, then you really need to review your informations. You've got the accumulation in here. It was ugly. Remember that this is an ugly accumulation, and it was hard to figuring out to be a trend back in the days. This is what I took a stop loss out of this area because I didn't see this one coming. It's not really a usual type of accumulation. Normally we don't accumulate within the context boundaries, but within the trend channel. So normally we should have been breaking down in here. I don't really understand why we made this pullback in here. So anyway, this is where we got the ugly trend beginning. We can clearly say, all right, trending, tried some kind of a pullback in here, got sold again. So we're trending. Definitely this looks like a trend. And we're starting to have some decent ranging structures. All right, so what we're having here is that this is the final excess. This is the final excess. Remember that final excesses is where you break through the context, all right, after pullbacking. So I would say this were, sorry. Oh my God, I'm going to use these tools. Yeah, definitely better. All right, so remember this is where we've got the weird accumulation, breakout, but it's an unusual breakout. It is not the typical way of breaking out, but still, visibly we did break out afterwards. I would say this could have been a divergence, this could have been a pullback, and this could have been a final excess, but normally we should have done below context, so kind of a very long final excess in here. This is a final excess candidate, but we have no blue triangle. This is definitely, I think, a context that does actually fit the plan of a final excess. So this area we don't know yet. Either it's just a divergence, and what we're doing right now is the pullback, and we'll still have the final excess to make lower in context, so probably in this big 1 hour chart area, like we said before. Or option number two, it's already finished, and we can already set this range to be reversing this. So this is the kind of range that will create the retracement up to the red area. So these are the two scenarios, and it just confirms what we said earlier. These are the two clusters. This is the bearish cluster, this is the bullish cluster. We don't really know which one we're going to get to, and we're pretty much trading halfway through them. All right, so there are two scenarios today, and trading in this area makes absolutely no sense. This area is going to be either the breakout area to go straight to 0.8, or it's going to be a resistance area, fake breakout, and we'll go straight to 0.7. All right, so trading in this area, very dangerous, which means this is our breakout area. All right, it's really simple like that, as simple as that to me. Remember that what you need is to have a context. Like we said, it's hard to define this context because it's between, it's either the trend divergent state in 15 minutes or we're already at the final excess. So this is possible to buy. It will be kind of trendy though, but still it is possible to do so. But we could still be divergent trading, which means we could still have a final excess to take. So this is where you want to buy. This is where you want to breakout trade. This is where you want to sell. You've got your fucking plan. That's exactly how you want to trade if you want to do 3-minute trades, all right? So how do? You're going to take 3-minute breakouts of this area. You're going to be picking 15-minute signals in there, 15-minute signals in there, all right? So that's your plan. 3-minute breakout here, 15-minute, 15-minute. These are 1-hour areas, so you don't take 3-minute signals in them. It's way too aggressive. You can be aggressive by switching one step of time frame to the downside to be more aggressive. Like in a 1-hour chart area, you're going to be searching for 15-minute signal. It's going to be more aggressive. You're going to have better prices, faster signals and stuff like that, and a little bit more risk, obviously. But you don't do 2 times lower. It's way too dangerous. If you do take 3-minute signals into 1-hour chart area, no, that's a little bit too much. So 1-hour areas, 15-minute signals. 15-minute areas, 15-minute breakouts, you can take 3-minute signals. All right? So that's what I'd say at the moment. You wait. I think this breakout in here has been detected. I don't nearly think it's valid enough right now. So I would say we should pull back to create a 15-minute breakout, all right? So as you can see in here, what we need is to create the accumulation. So I expect, and as you can see, we're overbought, and we're nearly confirming it, reversing out of a breakout attempt. So it pretty much says what I think. We've got a range. It's probably a bullish range, so there is definitely all the elements we need to take a bullish breakout of this area, but does it really fit the plan at the moment? I would say no. I would say we can expect some pullback probably in the early US traded session, probably like right now, not right now, but pulling back until 3:30 p.m. In here, so which would be 9:30 a.m. in the US time zone. All right, so US market open. I think the US market open will pull back to this trend channel, and then we might have the breakout later today. So that's my favorite scenario. I'm not saying this will exactly play out like that, but that's what I'm going to be following through the day. I'm not selling this area, way too dangerous, but I'm more likely waiting for this area to search for a 3-minute signal in here, and if there are no 3-minute signal, I'll let it go to find for a search for a 15-minute signal right into the big 1-hour chart support area. All right, if it breaks out without me, which means if this is the actual breakout and we go straight line, then this will just be without me. All right, we're gonna go fill the gap probably. So some scalping can be done in here, but we're not taking care of scalping for now. We'll do later in time, and then we'll just wait for this area to sell the market. All right, so it's searching for selling entries in here on the intraday basis. Pure and simple. All right, so that's it for today. You've got a plan. That doesn't mean the plan will go accordingly to what you expected. It's just that the difference is when you have a plan, it's really helping you, putting you into a professional perspective of risk managing, not bullshitting, not trading what you think is going to happen, not trading what you say, but trading what you actually and truly see, trading the reliable technical information you have in front of you. That's what you need to do. Stepping aside from gambling, jumping into trading, and this is the best way to do it. Just having a rational mindset, a rational strategy, and then you wait for the market to either prove you right or wrong by risk managing in between. So see you guys tomorrow. We'll see how this thing has played by tomorrow, and tomorrow obviously we'll talk about volume, and normally we'll set this thing in 2 parts, so I'll do kind of a introduction, generally half an hour or even a little bit more than that, to just make a presentation about volume profile, volume structures in bubbles and stuff like that, and then I'll probably gonna send you a notification into Discord to get into the live room and ask your questions if you have any questions and stuff like that. So there will be somehow a live session in which I'll be the only one to talk, and then there will be probably a second part of this live in which you guys will be able to talk, ask questions, type questions if you don't have a microphone and stuff like that. All right, so we'll see each other again tomorrow. I wish you a good one.